Welcome back, friends. We continue our discussion related to the financial statements, which we started with the profit and loss statement as well as the balance sheet. Let's take a step forward. Now, so far we were discussing very simple situation that you having some assets, some liabilities, and some of your incomes, some of the expenses which you are doing, and you calculate profit and profit figure or the loss figure which is there, and you calculated the balance sheet also. You prepared the balance sheet. Now, question comes: is it that so simple? Then why people take so much time to prepare profit and loss statement or the balance sheet? How companies take all? You can imagine if as per Income Tax Act, if we look at my year close at 31st of March, but my date of filing the final return with Income Tax Department as a corporate is 30th November. So the almost 8-month period has been given by the government or by the income tax to file the return, and companies normally take 3 to 4 months. Normally AGM of the annual general meeting of the companies happen in the month of July or June or sometime in August. Why they take so much time to prepare their balance sheet and financial statement? It can't be done in a day or two. It can be done, but they have a certain things certain important things information which we get later on. So this makes my process more complicated. Why? Because I get to know some of the information later on. The first and foremost, just like we have got the information about the stock, how much stock is there on 31st March. So for that you need a physical count and verify and re-verify the stock which is there with your accounts. Then only you can say this much stock is there. So this type of item which are not there as a part of the trial balance in each original figure, they remain as a outside items. They require to be two places treatment, as we learn because of the double entry system. Because we treat one place where two places. If you see in the I didn't I didn't tell you, but you still able to see there that stock figure was not given as a part of trial balance. It was given as an extra figure, and we treated two places. One, we taken the stock figure in my preparing income statement. In there where I were calculating cost of goods sold, so we used the where opening stock plus purchases minus closing stock figure there, and the stock figure is also part of the balance sheet. As I said, is in the current assets. Current assets are basically you having a stock is one of the important current asset where you keep it there. But second required amount of adjustment which are required in my calculation which are being done is called accruals and prepayment. Now what is this accrual and prepayment? Accruals and prepayments are those items just like expenses which are accrued but you have yet not paid. You can say these are outstanding expenses. Just like the salaries of the employees, you pay on, let's say an organization pay their salaries of the employees on 7th of the month. That's next month 7th. So that is where 7th, by 7th they pay, or by 10th they pay. So or by 1st or 2nd they pay. So when you're preparing your books of account, that is on 31st of March. So and you're making the payment salary on 7th of the April. It means on the 31st, because you, as I said, balance sheet is as on a date. So on that date, actually there is a liability on the business that they have yet not paid the salary of the people. So that salary expenses is the accrued expenses which yet you have not paid. Expense belongs to that year, not to the next year. So that's why this accrued expenses will go into the two places. Now firstly it will be adjusted into my salary bill of that year which I paid, plus you will add what is yet not paid. That is first treatment. Second treatment of this thing will be that this will be treated as a liability which will be treating in the current liability section. In the current liability section you will write what are the outstanding or the accrued salaries is the one of the current liability which you have yet not paid. So this is how we treat the accruals. Now second component is called prepayment. What is prepayment? The payment which you have made in advance. Some of the expenses which you pay in advance, that means the expenses yet not due but you have paid in advance, those are called prepayment. Can we take some example? Example, just like you paid rent quarterly in advance. So you paid the rent already in advance, That means on let's say you have paid the rent in the month of February for the next next 3 months. So it's let's say I paid 24,000 rent for the 3 months. So 24,000 divided by 3, that is 8,000. 8,000 was belonging to this year, but rest of the 16,000 is an advance payment that doesn't belong to this year, that belongs to the next year. So what we'll be doing is, in that case, we'll be subtracting this 16,000 from the expenses, just rent which we have added in our, which we have subtracted already from our thing. So I will be adjusting this rent there firstly, and secondly, this rent is an advance payment which I have made already 16,000. This 16,000 will be treated as a asset, which is a current asset, will be treated in the current asset side. So this is my one of the asset which business is owing. So two treatment for again prepayment as well. So another item which require lot of time to adjust is called depreciation. What is this depreciation? Depreciation is a wear and tear value of an asset. Means an asset which we just like we have using air condition, or we are using particular machinery or a building for which we are consuming, or the furniture we are using, but this is, we are not treating them as expense, but we are using them. And the life of the asset is, let's say, 5 years. Let's say I bought a projector. Projector is having a life of 2000 hours, or which will be spreaded over next 3 years, which I am going to use. So I purchase a projector, let's say, for 18,000 rupees. So what should be the expense for this particular year? So expense for this particular year is only 6,000. Remaining 18,000 out of 18,000 is the total amount which I put into the asset. Actually, that is also not correct there, which is 18,000 I put. So I have to do again two adjustment for this thing. One, this depreciation will be treated as an expense in my income statement, and my second component, that is the second treatment for this, will be this amount of depreciation will be subtracted from my asset which I am showing 18,000. Actually depreciation for that year is 6,000, will be subtracted. So amount left with me is 12,000 only. There are two methods which are being used to calculate depreciation. There are many methods, but two methods are which are generally used. First is called straight line method, and second method is called reducing balance method. Now straight line method, which I explained, is with the help of example, that 18,000 is a 3 years life, and you subtracted the divided by 3, and 6 year annually you are treating it as a value. But on the other side, the other method is called reducing balance method, where you fix a percentage as a depreciation. Just like, let's say I purchase an asset for 1 lakh and 10% depreciation for the first year. That means 1 lakh minus 10,000, that's become 90,000. But next year I will not be putting depreciation at 10,000 now, because remaining value, because it's a reducing balance method. So I'll come with the what is the remaining value of the asset, that is 90,000. Out of on 90,000, depreciation is 10%. Well, now this year depreciation will be only 9,000. Which method is to be used? Which method is to be used? See, the method which we use for the depreciation, it has to be defined in my financial statement. I'll write it and clarify it. Yes, this is the method which I'm using, because Companies Act as well as the Income Tax Act allow you this kind of thing. Now you can choose any of the method, but as a business, which method is more useful to me for assets which are which lose their value, initial value, very fast? Just like you bought a car, and the day you bought a car, within next year, if you want to sell it, I bought a car for, let's say, 10 lakh rupees. By next year, if I want to sell it, I will be able to sell it by 8 lakh only, right? So first year only I left, though asset life is 10 years, but in the initial year I lose high value. So for those assets we use the reducing balance method, and for the other assets which are going to be long term use, equally distributed across, just like buildings or all that, we normally use a straight line method. Another item which require adjustment with us is called bad debts. Now what is this bad debt? The debt, just like we mentioned about, you have given sold the goods on credit, some of the people may not pay back to you, So that is a loss which a business or organization is going to get to know. And this information you will not be available on 31st of March. How much is the bad debt? Yes, which are already happened in the year, you will be getting to know. Certain amount which are due, which are yet to be paid by the people, and you get to know that amount is becoming a bad debt. So bad debt is the debt which happened on a particular date. Is again you need to know. So for that particular year, if any amount which is getting bad debt, so you subtract this again as an expense. You treat it as in the income statement as an expense, and same time you will reduce your total debtors which are due by this bad debt amount which already happened in that year. That is the way you will be treating the bad debts. But let me tell you, friends, a very important thing. We create one more thing because by principles we are by convention, the accounting profession is a very conservative concept. How? Why? Because we believe if the losses are profit, we only treat when actual profit happened. We treat losses in advance. Even loss is yet not happened, we start thinking about if this loss will happen, what will be done. So for that matter, we always think about we have given some sold goods on credit, and some of the person may not be able to repay our amount which is due. So how should we tackle it? So we tackle it with the help of another account which we prepare, that is called provision. We create provision for bad debt or provision for doubtful debts. These are debts which are doubtful. This is the you can say this is very much prevalent in banking sector, which you very much heard terms which are Basel committee, Basel norms which are there, which are being used for classifying the assets which are doubtful assets or the good asset, bad asset. So this term is very much used for that. So we create a provision for the bad debt. Again, this provision which we are creating, this provision will be basically will subtract already which provision which we are creating this year will be subtracting from we are reducing our profit for that amount, and this amount which we are creating provision same time will be subtracting in our in the trade debtors figure in the balance sheet also. So let's conclude our discussion that what does a balance sheet reveal? A balance sheet reveal the position of the business, and normally you would be watching this thing that the balance sheet I have shown of period of 2 years normally, which is being accepted by the law also, that we should have at least 2-year comparison. What was my position last year and what is my current year position, so that you can have a comparison over a period of time. So it shows you first thing how much change is there in your current assets, how much change is there in your long-term assets, which you can say the fixed asset. If in the last year your fixed asset figure was 5 lakh, this year figure is 8 lakh. What does it mean? It means my company has purchased a new asset this year. At the same time, if your current in the current assets your inventory is increasing, that means you are not able to you are not able to sell your inventory, so that is able to reveal from there. Same way, do you have enough cash with you or cash balance is shortened, so that cash figure can be compared over a period of time. And then balance sheet also reveal what are my liabilities. Do I have paid my liability this year back on time or not paying on time? So that is if any long-term liability which is going to be due in the coming years or not due. So those figures are being told by the balance sheet. What balance sheet doesn't reveal? Let's learn that also. So balance sheet doesn't reveal 3 important information. The first, it doesn't show you what is the important asset which we are not owing as a business, but they are part of the business. One of the important asset is your human capital. The people, the key professionals which are running the business. So they are the assets for you because they are contributing to your organization, making your organization profitable and working so hard day and night, but you are not owing them. That's why you are not able to show them as a part of your balance sheet, as a part of your asset. At the same time, second limitation of this balance sheet is it doesn't show you what is the current value of the asset. It shows only what is the book value of the asset, and finally it also doesn't show me it shows only cost of the things which I bought it. market price of the thing may be much higher or maybe much lower now because the new technology has come, the market price has gone down, but I am just looking at what is the cost which I have been paid for that thing. That is the another limitation of the balance sheet. So balance sheet doesn't show you real picture of the business as well. Thank you very much, friends, for patience listening and understanding the concept of financial statements as a whole.